is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, weekly stock market analysis show, where we try to analyze from the technical charts what exactly happened during the previous week on the market, and then try to learn something from it and plan for a better trade for the upcoming week. That's starting from October 16th, Monday, tomorrow, 2023. So if you don't subscribe the channel, share it with your friends so that it will reach out to more. Let's get in the charts first of all. This is a weekly view that you're seeing here. You can clearly see that it's an ongoing bull rally that's happening, and then multiple flat breakouts that happens, and that's where you're on the index, left on the bank side, right on the bank index side, and left on the Nifty, right? So it's clearly visible that it's a breakout that's going on. It's a rally that's going on. You're halted and taking a break, and then you're pulling back. And so the weekly view is within a parallel channel, and it's very much visible on both indices. Right side you have the Banknifty, which really shows an M pattern that's hitting the resistance multiple times, and now still at the bottom below the 50 Fibonacci extension on the Banknifty, and below the 78.6 Fibonacci extension on the Nifty. That's where we are. This is the daily view that we are seeing that there's a parallel channel there, and you can also see that there is a box pattern there, and it's consolidating. Banknifty on the right side is also having a box pattern. It's having an M pattern, up move, down move, up move, down move. That's what is happening right here. You can also see that it's a 20 exponential moving average, and Nifty has managed to close above that, but Banknifty is still below that on the 20, 50. It has fallen below actually the 50, 20, and 100. All these exponential moving averages, Banknifty, but Nifty has managed to close. So in a way, it's very evident that the Banknifty is clearly weak, and Nifty is showing some strength relatively. This is a candlestick pattern that you're seeing. The candle, the weekly candle is formed to be wide range, and it's green, right? And it's a small body with a high volatility that is seen in the Banknifty, the candle, right? It is the support zone in the Banknifty, and it is also seems to be having a bounce up, trying to reverse in the case of Nifty. Yes. So that's a correct view is this like. So on the left side you can see the Nifty that's having a bullish candle, but you can see that it has fallen down. Right, a green candle, white range, fallen down. But in the Banknifty daily charts, you see that it's almost like an inverted hammer, and it is showing a long big size, showing the volatility. So that's what Friday's close on the daily on the Banknifty is all about. Week, pretty much weak. So if you look at all the 4 days, what has happened in the last 5 days, not 4 days, 5 days, what has happened is it's a down move, an up move, and down move. So it's a V shape and then an inverted V shape. That's a kind of one. Finally, it ended flat. Nifty ended negative. But it's moved the same, a down move, up move, and again a down move. It's a V shape and an inverted V shape, and then finally closing slightly negative. That's where we are. What do you look at this? It's absolute consolidation, contraction of the bands, and then the close is slightly bullish because it's closed above the moving average. Right? Median of the Bollinger Band is closed. The Bollinger Band is also showing the Banknifty that it's pretty weak with negative bias on price closing below all the moving average exponential, and even the median of the Bollinger Band also. So sideways, which bearish bias on Banknifty, sideways, which bullish bias on the Nifty. That's what we are. That's what the Bollinger Bands are talking about. Let's get the numbers a bit. So Nifty managed to close 0.5% up, 99 points up, with a white burn green candle, right? And the previous week we had a nosedive. So that nosedive, is part of the 20% of rally that has happened. The Banknifty it is closed negative slightly, 0.15%, 60 points negative down. That's a weekly close. The small body, but still a green. That's what happened. But nosedive happened in the Banknifty also, and that's also an ongoing rally of 20% up. Retracement is happening in between. So daily time frames are showing that it's negative on both indices. On daily, 0.43%, that's 20 points down on Nifty, and 0.70%, 300 points nearby on Banknifty. Right? And it's an inverted hammer we are seeing on the Banknifty in the daily charts, and a white body green candle that's above the 20 exponential moving average. Is what you see on Nifty. Well, Banknifty has lost the 20, 50, 100 all exponential moving average. So it's basically a V-shaped reversal, and then an inverted V-shaped reversal that has happened in the last 5 days. So markets have corrected 4.5 to 5.3%, an ongoing rally of 20%, and a good attempt to reverse back has happened basically. That's what you can summarize it. So basically it's consolidating, as we have seen in the Bollinger Bands slides earlier. So supports are existing down below. You already know that. So it's a major support zone, and how long you'll be able to maintain the support, or how long you'll be able to break out of the resistance that is created while it had nosedive from the top. That's what matters in Bank Nifty. So, Quality bands, absolutely, we have seen that it's a bearish bias on the Bank and bullish bias. Consolidation, sideways movement is what is happening in both indices. Let's move ahead and see the support resistance levels. So here we have the 19726 resistance that would come in, then 19751, then 19800, 19879, and then 20,000, and then 20,115 and 20,000 all-time high. That's resistance on the upside. Downside, you would have the supports that's seen as 9651, 9587, 957, 19333, and 19301, where the 100 exponential moving average is there, and the 9201 we have a major gap support also. The breach of that will take you to 9011 next gap, and then 18887. Let's see supports on the downside of the Nifty. And Nifty, what you can see is the first major resistance will be 44,531, which is the moving average exponential 20, then 44,620, 44,720, 710, 44,779, 44,950, 45,100, and then 45,411, 45,655, 45,781, 45,906. Basically, the support, so the previous swing lows and swing highs, gaps, and moving averages that's used to analyze this. Similar to the downside, the first support will be 44,500 nearby zones, 44,330 after that, 44,216, 44,182, 43,796, 43,592, and you have the 200 exponential moving average at 43,368. Right, that's a downside and upside. So the major 3-month consolidation support that we're seeing is right here, the end bottom of this box on the Bank Nifty. Right. Similarly, Nifty, the support zone will breach at 19201. So as long as it does not breach 19201, we are still consolidating and trying to attempt to finish the correction and move up. Studying the momentum and the trend indicators in Nifty and Bank Nifty weekly and the monthly. Left side you have the weekly. You can clearly see that Nifty maintains the bullish momentum on the weekly medium term, but Bank Nifty has lost the momentum to have the momentum the sideways slightly. Daily charts, you can clearly see it has lost momentum on the bullish side, and it is consolidating and resisting below the RSI 60. It means sideways, absolutely sideways on both. Just to summarize, you can see that Nifty is sideways falling momentum. Bank Nifty also is sideways falling. So both are sideways and falling, right? With for sideways falling means the sideways momentum is slowly, could get into the bearish zone. So it's sideways and it is weak. And the daily chart is showing it's bullish and right. On the medium tops, it's bullish and rising on the Bank Nifty, but we already seen that it is sideways and falling in the case of Bank Nifty. So Bank Nifty is relatively weak with respect to the momentum, and the trend indicator radius that we are using is showing that it's bearishness and falling. It's negative biased, right? Bearishness is reducing while bullishness is increasing. Same with Bank Nifty also. Bearishness is reducing and bullishness is reducing. So it's trend is sideways, absolutely, right? Moving on to study the volatility and open interest analysis, you can see that the VIX has closed, with 3% up more. That's happening, positive 3%. That's 10.61. Low volatility, very low volatility, but it was very granular volatility is very high. Intraday volatility, if you see, it was very high. It went up to 13%, and then finally reduced at 3%. Right, close to close basis. So that's the kind of volatility that you're seeing in the bottom. You can see that it's at historic lows. It has been falling from the 16 levels since the beginning of this year, and it still remains in the historic low levels, which intraday calculating high, is very high. Open interest analysis of the futures open interest is showing that it's bearishness, long unwinding in the Nifty, and short build up that is happening in the Bank Nifty. So open interest of the options for the next weekly expiry, that's October 18th, 19th for the Nifty and the Bank respectively, showing that the put call ratio is not bullish enough in the case of Bank Nifty and just managed to be on the border of the bullishness on 1.05 in the case of Nifty. So overall, there is bearishness that is indicated in the futures and the options open interest for the next upcoming weeks. Look at these levels. So highest support is seen as 19,700, highest resistance 19,800, and 19,000 is the second highest support, and 19,900 quite range is where the second highest resistance is seen. 43,000 and 44,500 is where the highest put and call writing is seen on the Banknifty, and 42,000 and 45,000 is where the second highest put and call writing is seen, right? This put call ratio and futures of interest build up is negative bias. You already seen that, right? So the levels you can understand very tight range of 100 points in the Nifty, and 1,500 slightly wider range in the Banknifty, where the put writers and option writers are put and call option writers are seeing the support and resistance. Let's correlate this with the support and resistances levels that we already seen in the previous slide, and then you can conclude that what to enter and what to exit, right? The levels support resistance can be clearly studied from combining these two studies. Moving on, very interesting thing in the sectorial watch, there is good recovery across the sector that has happened in the case of multiple sectors just turned bullish now. The FMCG, the auto and the realty are turned into bullish in the case of weekly as well as daily charts, and you can take long, you can consider taking the long versions in all the sectors, FMCG, auto sector and realty. So this revival has happened last week, because previous to that we had all the sectors which has gone into sideways. Now we have three sectors that is leading and charging from the front, and the only sector that fall down was 1.7% down, IT sector. Otherwise all the sectors were moving up last week. Metal 1.15, auto 2.86, pharma 0.75, FMCG 1.8, and realty 4.3% up. So that's it. So the boss bullish are this thing, right? Realty, pharma and auto have turned to bullish zones. It's very positive. Clearly see that in the charts here. Right? Medium term, intact momentum is seen across the sectors. Right? And good revival recovery has happened. The last week's very much evident from the momentum trend. You can see that there is a bullish divergence also that's seen in the pharma, which could turn out to be another breakout and another the fourth sector that may be leading. So if multiple sectors in the index are leading in the medium term charts, the definitely market is going to move. So this is very positively, you can see this as very positive analysis. The next, if you're studying the stocks that contribute maximum to the index weight, right? It's quite a little disappointing, although we can see that it's on the edge. HDFC, you can see that it has managed to hang on the trend line. It has managed to bounce up from the 40 RSI, so this sideways absolutely, and on the brim of breaking down, but just hanging on there is what you can see sideways moment. HDFC, Reliance also sideways, but slight up move, green close on the Reliance. HDFC Bank also slight up move, but after it has slipped, it is slightly turning back to get back to momentum. So, but overall, all the three giants, HDFC Bank, Reliance and HDFC, are in the sideways momentum. Who is in the bullish? Nobody is in the bullish. IT sector, only the TCS is in the bullish zone. That is also facing some resistance at the trend line or the breakout zone. Infia slipped in sideways last week, with having met with the resistance there. Kodak Bank also sideways, ITC also sideways, and trying to move up, but green close. Overall, there is some recovery in the major stock index that contribute to index is there, but overall, none of these are leading in and already in the bullish zone. They are all struggling the sideways, But green close is what is seen in the Kodak Bank, in the ITC, in the HDFC, in the ICICI, and in the Reliance Industries last week. Good recovery seen, but overall sideways momentum is what we have. Institutional formation, if you see, this is where the sad part is. Which is continue to sell 3969, but the good point here is after 17 days of selling, the first time we are seeing a green buying close on this Friday of 300 crores, hardly anything, but at least after 17 days we have one green day on a daily basis. Cash market buying has happened from that 5, but if I net for 4,000 crores nearby selling, the dealers are compensating double of that by buying 7,085 crores. Net longs on the derivatives also moved up, if you see. So institutional wise, last week do not know is positive, is in green, but the Fyers side continues selling, continues on week basis for the 12th time. Actually, it's a mistake. It's actually 12 weeks or more since they had been net sellers, right? So that is not very optimistic. That has to change into buying more. So things to be optimistic, and the rally has to continue. The global markets and the global commodities is what we're going to study. So dollar has moved up. This is also a mistake. It's not closed flat. It's closed up. So it's 0.5% up move that has happened in the dollar index. So it's a 7.3% up move now that has happened. The chart is seen on the right side here. It's a breakout from the cup and handle, and it's bullish momentum also. So that's a danger. Dollar is strengthening and moving up 106.67. But the rupee also has moved up. That's not negative there. So sorry about this mistakes that has happened in. It's positively moved up. At 0.17% it has moved up, and it's 83.23. It's the lowest in the week. It's The weakest rupee is what you're seeing. So you can see the chart here. It's there's some interruption that happens the moment it breaches out of this 83.5. That's why it's being maintained. You don't know how it is going to break out and then go and touch the channel top. But it's a dangerous situation. Rupee is remaining very weak. Momentum is climbed in the bullish zone also. The dollar also is rising. So that's the sad part that the economy may get impacted if the rupee becomes even more weaker. Look at the crude oil. It's in top of the channel and then reversed, and then due to the Israel crisis, it seems to be spiking back on the weekly basis, but it's very much contained within the weekly crash, previous weekly's crash that has happened. So as long as it is maintaining itself within this channel, it should be okay. But momentum has at least slipped in the sideways on bullish onset. But look at this, what has happened in the gold. Big breakout up move from the cup and handles, and seems like people have suddenly found that investing in the gold may be a better option than investing in the equity market. So this is a dangerous situation. This may be time for some cautions if it is going to hit the resistance zone here and then moving further up. You have to be very cautious. Look at that bullish big spike gold. That's what. Now US indices, if you see, there is green tick, but not much. It's just a attempt to reverse. You can see that all are slipped in the sideways and then trying to attempt to green close for all the major indices on the Dow Jones, Nasdaq, and the S&P 500. That's what you can see, the US indices, right? 0.80, 0.43 S&P, Nasdaq 0.15 slight, but all green tick. So it has slipped in the sideways and then it's trying to come back. It's descending, but it's clearly seen. Right? Gold is 5.5% up just single week, and it is breaking out of the trend line and then rising up 14% up move from seeing high. Trace 14% retracement has completed, and now it's suddenly spiked up, breaking out in gold. Crude is 6.2% up. That's one. So 87.6 is danger zone. So you already seen that. So just to summarize, rupee is becoming weaker. It's a concern. Crude is spiking up. It's a concern. A war is going on. Gold, people have shifted money to the safer haven of gold. That means the investment in the equity market may come down. So now I have to be cautious. So these are things we can conclude from the study of the commodities and the currencies and the global markets. Now stock picks action for the next week. First one is Tata Motors. A rounding pattern is there. There's a flag breakout has already happened, and another small flag breakout second that has happened. That also is confirmed, and good risk-reward trade opportunity can be there given the rising momentum and the rising trend that we can see. The volumes are also above moving average. So the good bet for swing trades in the next week or two. Interglobal aviation the second. We can have solid trend line support is there. Inward head and shoulder pattern breakout has happened. There is another cup pattern that also has broken out. Now it's an apparel channel, and a breakout from here could go up to 3081 at least. Decent volumes. Momentum is bullish and trend is bullish. Interglobal aviation is another swing trade opportunities for the next week. This is the payoff chart, the action number for the Nifty weekly options. This is a Batman strategy. It's completely hedged, risk defined, reasonable profit, very good range between 19,400 and 20,000, reasonable range, and it's a net credit strategy. Right? We are selling OTMs on both sides, and we're buying half of that as inside hedges and other half as the outside hedge. Right? It's completely hedge strategy. Very good risk reward and a very good range that we can get here. Small profits if we get out of 1%, 2%, before the expiry day. So that's actionable on the Nifty options for the next week. Let's just try to wrap up. So last week actually an attempted recovery continuation happened, but it was a very volatile V-shaped move and then inverted V-shape. That's what has happened. So 4 to 5% of reversal. 4 to 5% of correction from the top, and ongoing rally of 20% is what we are seeing, and things are not that great. Fyers are selling off continuously. US indices are at resistance, and then weak rupee is weak, and oil spike is there, and received cattle patterns and fallen momentum in the trend. Bullishness is not enough on the PCR. Bollinger Bands are showing sideways consolidation. Banking index is especially weak. Bearish open interest in the PCR. All this give hope for the bears that more falls can come in. But some confluence of supports downside is there to the weekly moving averages, gap and channel, trendline channels and all that gives a good support on the downside. And there is a sectorial momentum pickup that has happened. So 3 leading sectors have come into it. These are all the hops for the bulls that it may be mildly bullish also. But my conclusion is that it's it's going to be neutral. It's a neutral or a mild bearish view is what I have for the next week. The thing is that market is trying to attempt to reverse after some correction from the top, and in V and inverted V shape that is showing, and consolidation very much evident. So how long it will be able to hold that support downside, and how long it will be able to, how much more energy it has got to take out the resistances with the gap that is formed on the upside during the notch dive from the top is what matters. So view is neutral, mild bearish. Global cues are not right. Inflation, interest rate, Fed rate, wars, and all these things are happening. So it could get escalated to any time, and black scans could make. So always hedge your positions. All we can do. So levels to watch is for the next week is 92,200 to 20,000 on the Nifty, and 43,500 to 45,500 is the levels to look out for the next week. So as long as this 92,200, which is a major support zone, and 44,000 is a major support zone on the Banknifty, these are maintained, then there is a hope of consolidation and then continuation of the breakout from there. So always have hedge positions, protect your capital. That's all that it's in our hands. Right? Reduce your position size, which is for the spiking up. Which is at a very low level right now. It's fine, but no, protect your capital. Not take overnight risk, right? Otherwise, your capital will wipe out. That's all we can do. No? Now there are a lot of option strategy videos that's in the playlist. Check out that and then see. And also, if you're not subscribed and watching this, subscribe and share your friends. Reach out to maximum people and put in your feedbacks for improvement, and then like it if you like it. Right, so subscribe to our Telegram channels. They have daily analysis and screenshots and tactical chart patterns are all posted, so don't miss out on that. Subscribe to this Twitter especially. Right. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.